Welcome to the Bitcoin Tutors. What is Bitcoin? What you need to know about Bitcoin and why it's so important. So let's start. What is Bitcoin? Is it money? Maybe it's currency. The IRS thinks it's property. Maybe it's an equity like a stock or a bond. Or is it something completely new? Well, let's start with who I am. I'm Marc A. Carignan. I'm a Silicon Valley entrepreneur. I've been working with multiple startups for over 15 years, and I've really had a number of different roles in sales, consulting, training, coach, including an executive coach, and I'm an author of 2 different books, one on leadership and one on Bitcoin. And what I do best is I take complex technology and make it really understandable and actionable. My Bitcoin experience, like everyone in Bitcoin, is fairly new and fairly recent. Bitcoin's really only been around since about 2009, and I discovered it in early 2013. Like many others, I didn't grasp the importance of it immediately and how important it's going to be, I believe, to technology and a number of different social institutions. The tools and software at that time made it difficult to invest. And so I stopped and I started a couple of times until I got the hang of it. And I get to bring some of that knowledge and experience here with me today. But with all of that, I was just really fascinated about learning about it. The idea of decentralized money, where really no one's in charge. The technology behind it that is really powerful even beyond money. And really the idea that this is not evolutionary. There are several things in Bitcoin that make it revolutionary, that make it something completely new. I actually decided to write a book on this topic with the same name, the Bitcoin Tutor, Unlocking the Secrets of Bitcoin. And I've had the great fortune to have some great comments, some great feedback from some of the early readers of the book. And I put those up here for you to take a look at. So let's start with the value of Bitcoin. So the price as of July 3rd, 2014 is $645.65. That is the price for 1 Bitcoin. Yes, it is the most expensive, if you will, the most valuable currency in the world. The second most valuable currency in the traditional world is the Kuwaiti dinar at about $3.60. And every other currency is less than that. Right below here is an excerpt from my book talking about the value per Bitcoin and how that's increased dramatically, looking at the start of each year from 2010 all the way to 2014. What you'll see is a dramatic increase in its value, derived mostly from buyers and sellers deciding that the value should be higher. The other thing finally to note is as of January 1st of 2014, the value was $816 per Bitcoin. We've had a little adjustment here. It's dropped and it's on the way back up. And we will see how the January 1st, 2015 turns out. But my guess it'll be well above $1,000. So first of all, Bitcoin, I believe, is the first true digital cash. The idea is this is cash, not just credit and not just digits in a computer. This is the equivalent of cash that can be transmitted online. Try sticking a dollar bill into your internet service provider or into the wire coming out of your computer, and you'll find that's pretty difficult. And in fact, all transactions online today are done with either credit or debit cards. Bitcoin allows you to do it in cash. And like cash, you don't need to authorize the credit card transaction. And like cash, transactions are irreversible. Once you've paid for something, that's it. Now, of course, you could always exchange it back if the merchant has a return policy. Then, just like getting a cash refund, you could get a Bitcoin refund. Also, Bitcoins are very secure. They cannot be copied or counterfeited. And even though they're ultimately ones and zeros, as everything on the computer is, there are certain systems that have been set up, the Bitcoin system itself, that prevents these from being simply copied. A copied Bitcoin is irrelevant. This is following a very traditional model that we've seen where the traditional elements like mail has now gone digital to email. Shopping malls have really led to online shopping. Even medicine has now become telemedicine, especially for rural hospitals where they bring in an expert doctor from some other larger city. As you know, banking is now e-banking and mobile banking. And Bitcoin, I believe it's just time now for cash to go digital as well. Let me ask you a question. Which one of these is different? So certainly depends on who you ask. I would say most adults would say, well, those two items at the top actually have value, and the monopoly money does not. But if you ask a child, they'll probably say, well, two of those things are paper, and one is gold, or one is round, or one is a coin, and they may look at that as being different. So let's take a look at what is money then. There are certain characteristics that most experts believe that money requires. And these are 7 of the ones that most experts agree with. First of all, money needs to be a unit of account. Really, that means it needs to be measurable. There needs to be an accounting notation, such as 2.50 for $2.50. It has to be a medium of exchange. The idea is rather than going back to barter where I exchange, gold for some other commodity, apples or something, or exchange goats for half a cattle, and I cut that up. Really the idea of the medium of exchange makes it simpler. You have paper or you have coins or something that makes it simpler. It's also portable. It has to fit in your pocket, or it has to be accessible that way. It needs to be durable. That means even paper money lasts quite a long time, easily 5 to 10 years, depending on its circulation, because the paper is made from a heavyweight cloth paper and these kinds of things. So it doesn't have to last forever, but it has to last for a while. It also has to be divisible to be money. Can you make change? If I have a $5 bill and something costs $2.50, can I easily get the change? It also has to be fungible. That means $1 bill is worth the same as another. This is an area where it's different when you look at the so-called numismatic coins, these unique old coins. Those have unique value in each individual coin regardless of the face value, as opposed to a standard bullion gold coin that each bullion coin has the same value. So the bullion coins would be fungible. Finally, it needs to be a store of value, and this is in fact the most disputed and disagreed or agreed upon point out of all these characteristics. Does the money hold its value over time? And that includes its commodity value if it has one, such as gold-backed currency, and is it sufficiently scarce to keep the value high? If there are 1 million ounces of gold for every person on the planet, it's not so scarce and the value would actually fall. But the fact that only so much gold gets mined every year actually makes it scarce. Generally, if something doesn't follow each of these characteristics, then it's probably just currency and not money. So let's look at currencies. The most common currencies today are called fiat currencies. Now this is something that was previously money. In other words, many of these currencies used to be gold or silver coins, or they used to be something of value. But most of these currencies now really don't have value, and I'll explain that in a moment. What happened is we went from gold and silver coins to, for convenience, we went to these IOUs, which is really paper money saying this paper bill had the buying power or could be exchanged for silver or gold. And in fact, in the United States, in the beginning part of the century, there were gold and silver certificates that you could effectively go to the bank and exchange your paper for a gold or silver coin. Then paper money started being backed by currencies. So rather than actually carrying gold and silver, or even the IOUs, we were carrying paper money that had a certain percentage backed by currency. Usually something like 20, 30, 40% of the value of the printed paper note had gold or silver behind it. The interesting thing is Switzerland was the final Western country to have an asset-backed currency. You see, it was backed 40% by gold reserves until the year 2000, when it became fiat. So let's talk about what that means. Currencies today, as I mentioned, are fiat, and fiat simply means by decree, and in this case, by government decree. You see, fiats have no intrinsic value. They are no longer backed by a certain amount of gold or silver, and this is really something that most people today take for granted. But in the last 4,000 years, it's only been in the last 40 years that humanity has not consistently based its currency in metal, and primarily it's been gold. Whether it's been a gold coin, whether it's been a gold IOU, or it's been a gold-backed currency. This is an experiment. It actually is, in my opinion, the largest social experiment on a global scale ever done with money. And let me assure you, there have been some failed fiat experiments in the past, including Germany's Weimar Republic mark, the German mark, between World Wars I and II, when the value of that mark became so low it cost 4 million marks for one glass of beer, and 10 million marks for a loaf of bread. It was actually used by a lot of the locals to warm their homes, and they would actually burn the money because it was more valuable for heat than anything else. Sounds ridiculous, and it sounds like something that could never happen again, but human nature has a way of repeating itself, and human experiences do. So what happened on August 15, 1971 is the U.S. temporarily left the gold standard. In a speech by Richard M. Nixon, that was televised, and he literally said, "We are temporarily suspending the gold standard." Of course, that opened the door for other countries to follow, and it really became permanent after that. So this experiment is not normal. This was also an interesting prelude to the birth of Bitcoin. Bitcoin really was defined in 2008 and was born in 2009. And as I write in my book, it was the perfect storm for the emergence of Bitcoin. The financial world was failing. This is the time when we had the subprime mortgage crisis, we had the European sovereign debt crisis, this Federal Reserve Bank's QE or quantitative easing, and so on. And we're still in that period of pseudo-recovery. And that is one of the main reasons that Bitcoin has been really accelerating in this time of uncertainty. So, I gave you a background on money because I feel that it's very important to understand what money really is before we look at Bitcoin. So Bitcoin is the world's first secure cryptographic currency, often abbreviated BTC, or a B with the 2 slashes through it, such as in that coin on the right. However, it's not really a coin. It's what's called a cryptocurrency, or simply a crypto. It's a secure virtual or digital currency that's secured with military-grade cryptography, created by the military and the NSA, the National Security Agency, and other similar organizations. And what they've done is they created unbreakable cryptography. Basically, what they use for secret codes and messages can be used for a number of different uses, including cryptocurrencies. Bitcoin brings along 3 major technology breakthroughs. One is trust without a centralized authority. The whole idea of being able to trust in currency transactions without a central bank, without a clearinghouse, without having a Visa or MasterCard having to approve and process and authorize everything. Secondly, it has a unique proof of work concept. Built into the Bitcoin protocol or the Bitcoin network is a scheme or an approach of how to verify that certain activities have occurred using something called proof of work. Finally, and probably even the most significant, is something called the blockchain, which is really a chain of blocks of information. And these blocks are actually a decentralized public ledger of all transactions that have ever occurred in Bitcoin, and they get created on a regular basis. This creates the wonderful transparency, so everyone in the Bitcoin network can see all the transactions that have occurred prior. It was invented by Satoshi Nakamoto. None of us know who this person or this group is, but really the identity is immaterial. This technology has been vetted by numerous experts in technology, and this is a very solid technology, and it's open source, so that everyone who wants to take a look at how it works can do that without compromising the ability that the fact that it does work. Bitcoins are also traded on exchanges called Bitcoin exchanges. Similar to going to a stock exchange for stocks, you go to a Bitcoin exchange for Bitcoins. You can buy and sell them at market rates. You can even exchange Bitcoins for fiats, such as dollars, euros, and pounds, and you can exchange them back. The rates are based on supply and demand. So if there's enough people who want to sell it or buy it at a certain price, then the Bitcoins are sold. Finally, the market is open 24/7. This is not like the stock market or Wall Street, any of those kinds of markets that close on weekends and nights. This market is literally open all the time. So, we've talked about money and Bitcoins. Let's talk about where Bitcoins come from. So we have our gold miner here in the upper left-hand corner. We have a pretty good idea where gold comes from. You know, it comes from mines, rocks that get pulverized and then separated from the other materials. So where do Bitcoins come from? Well, look at the other picture. They come from large data centers. They come from computers. And they come through a process that's known as Bitcoin mining. And the reason it's called mining is because there's a lot of similarities to gold mining. First of all, there's thousands of decentralized computer servers, and each of these computers is referred to as a miner. Every 10 minutes, a new block of Bitcoins is created, and that block goes into the blockchain. What happens is all transactions that have occurred in Bitcoin anywhere on the planet in the last 10 minutes go into a new block. And the miners actually confirm the validity and records them in the blockchain as part of their mining activity. So, you know, these are activities that otherwise the Visa network does or your local bank does. In this case, this decentralized group of miners actually processes the transactions. The way they do that is using a competition. And it might sound unusual, and this is actually one of the breakthroughs in the proof of work, where there's a competition to solve a mathematical puzzle. That's called a hash. So what does that mean? Well, out of all the thousands of miners in the Bitcoin network, the game is on for the first miner that can solve the puzzle, and whoever solves the puzzle gets a reward. That reward is currently 25 Bitcoins per block. And you remember, each Bitcoin right now is worth about $650. So the miner gets 25 of those, plus any transaction processing fees that typically get passed in the network. The verified block is added to the blockchain, and this mining effort prevents digital copies and double spending. The fact that because this is all computer data, someone could try to forge one of the blocks so that they can get more money or more Bitcoins. And this process prevents that. Miners also typically work together in a pool, meaning a mining pool. And that's the term used to define a group of miners that work together rather than each miner, panning for gold on their own. Finally, the Bitcoin network and the program behind Bitcoin has defined a maximum of 21 million Bitcoins that will ever be created. And that helps guarantee that there will always be a certain amount of scarcity of Bitcoins, which is something that all money requires. Mathematics are used, as I mentioned, by the NSA and others worldwide. Again, these are known as hash or hash functions, and they have names such as SHA-256, script, Ketchak, and other names depending on the different hash functions used. What's unique about these and why they're so important is that the NSA and their smart folks there created these functions or these programs that cannot be inverted. That means what goes in and then the answer that comes out of this hash function cannot be inverted. You can't go backwards. So you can't take the answer and figure it out what the original input was. And this is really important because to be able to encode or secure the input information, and these are going to be like secret codes and your information about your Bitcoins, that needs to be encrypted. So this encryption cannot be inverted or converted back. The other thing is high-end computers are now required. It used to be that Bitcoins could be mined with a PC or Mac at your home. Today, miners cost $5,000 plus, they can use 20 amps of power, and they run hot and are liquid cooled. And they also operate at very fast rate, what's known as 1 trillion hashes or terahashes per second or higher. Okay, so now we've mined all these Bitcoins. Where do they go? Well, Bitcoins, rather than going to Bitcoin bank accounts, they go into something called a Bitcoin wallet. There are two major categories of wallets. One is online or a live wallet. Out of those, there are either computer or desktop wallets that can live on a PC or Mac. There are online wallets which are the easiest to use, which are web-based, like going to any website. And then there are mobile Bitcoin wallets, which allow you to carry your Bitcoins around with you with your smartphone, whether it's an iPhone or Android. For people who have a lot of Bitcoins, it's important to also have cold storage. That is, the ability to take Bitcoins and make them offline. And the first option here is to have an offline computer, whether it's a PC or a Mac or even a Linux box, which is another type of computer. You can also have something called a hardware wallet. Which is usually a dongle or a fob. It has these funny names. You know, these are about the size of the car alarm. Your auto lock and unlock device. These are just coming into existence this year in 2014, and I think will become more and more a viable option moving forward. And then finally, a paper wallet. Yes, paper. You can actually store Bitcoins on paper, but then you have to secure that paper as you would cash. The way these are secured is with something called public and private keys. Again, this is another type of cryptography. There are multiple types used in Bitcoin to mathematically secure and link this information. What's important to remember here or to learn is that just like your bank account has a bank account number, your Bitcoin wallet has what's called a wallet address. This address is a sequence of letters and numbers that's needed for someone to send you Bitcoins. What's great about this wallet is the wallet address alone cannot be used to withdraw Bitcoins. You know, that's one of the risks with credit card numbers or with bank account numbers. If you have that number and can masquerade as that rightful owner, you can in fact withdraw money from a bank account or spend funds on that credit card. You can't do that with Bitcoin. What's required is something called a private key. The private key is required to send or withdraw Bitcoins. In other words, to take them out of your account and send them somewhere else. Without access to your private key, no one can access your Bitcoins, not even the government. This is important. You have access, and that also means no one can help you if you lose them. So personal responsibility, just like responsibility over your cash, is very important. If you lose your cash, you can't complain to anybody. And ultimately, this is the information that must be protected. The model is pretty well understood to be similar to the safe deposit box model, where the public key is available by anyone in the bank, in this case is anyone on the network, and the private key is held only by you. And to be able to access the Bitcoins in your safe deposit box, you need your private key. So this is a way to think about it. Without your private key, you cannot take anything out. So how do you get Bitcoins into that wallet? We've talked about mining them, and mining isn't something that everybody can do because of the cost of mining these days. So how do you get them? Well, you can buy them. You must be online to buy, but you can buy them with cash or bank account transfers. And there's many different sites that allow you to do this. You can also receive them from someone else. Now, interestingly, you don't have to be online yourself to receive them. You can get them as a gift. You can get them as a payment. And all that is required for the buying or the receiving is your wallet address. And here's an example wallet address. Here, starting with a 1 and running about 30 characters. So this address, you would not have to type it in. This is the type of thing you would copy and paste, or that would already be entered for you. A simple way to send Bitcoins here is with this sample form. Most online wallets have forms such as this that allow you to fill in the blanks. So in this case, the 3 boxes where you designate how many Bitcoins you want to send. In this case, I want to send 0.2 Bitcoins. The current price in this example was $816. And then I say, I write in the wallet address or copy and paste it in. And then if I want to, I can send a message. Now it's interesting because Bitcoin, the network itself, works a little bit like email as well, where you can pass a message. You can attach an invoice number. You can attach a little thank you. You can attach some reason for that transaction. Why are you sending those Bitcoins? So you have that option to fill in a message. And then you click on Send Bitcoins, and they go off. You know, as I mentioned, this is like cash. So security of your Bitcoins is your responsibility. It's important for you to manage your passwords that typically secure your private keys, because it is similar to cash. Now, a username and password is something that you typically enter when you go into online banking. And you can do that as well with Bitcoin, especially with the online wallets. This is known as something you know. Banks are also catching on here because many banks now are realizing that username and password alone is not considered secure enough. So the next thing that's being added is something called two-factor authentication. The concept behind that is you already have something you know, which is your username and password. Now the security requires you to have something. And the thing that we all seem to have today is a phone. So we can attach some information that's only available on your phone for you to authenticate or verify your identity before allowing you to take money out. So this way, if you lose your username and password, right now most people can break into your bank account. But with two-factor authentication, they cannot break into your Bitcoin wallet. The way this works is on a smartphone, you can have an app that's called a one-time password generator. And when you are ready to log in to your online wallet, you open the app and it'll give you a special one-time password that changes every 20 to 30 seconds. And this is only a password available to you. So even if someone else installs this app, they won't have the same password or one-time password that gets generated. For those with traditional phones that aren't smartphones, you can also receive an SMS or text message as well, and it works the same way. So where can you use Bitcoins? Well, you can use them online or in person. Online is just the easiest place because Bitcoin makes it easy to actually use them because it follows the shopping cart model that most people are already familiar with credit cards and debit cards. Some of the major vendors or merchants that are using them online include Expedia, Overstock, even Virgin Galactic if you want to invest $250,000 worth of Bitcoins for a trip into space with Richard Branson. You can also use them in person. Yes, even though they're digital, you can use them in person at thousands of restaurants and coffee shops across the world. A notable company that's using Bitcoins now is Tesla Motors. You can actually go buy your $100,000 or $60,000 Tesla car in Bitcoins. The way you would do that is you actually have to use your mobile wallet. And that's how you can use Bitcoins in person. And my website talks a little bit more about that as well, and we can talk about that a little bit later. But the mobile wallet is really going to be the key to bridge the gap between the digital world of Bitcoins and the physical world of in-person transactions. Another example is that a multi-million-dollar home in Florida was recently offered in the MLS optionally for Bitcoin. So someone could choose to pay in dollars or Bitcoin. Finally, if you're looking for merchants, it changes every day. There are thousands being added all the time, probably 1,000 new vendors every week, if not more. You can visit coinmap.org or spendbitcoins.com. to get some idea of some new merchants popping up, especially the in-person merchants. And be aware that certain hotspots for technology are going to have enclaves where there are many merchants in a certain neighborhood. So why should merchants take Bitcoin? First of all, they save a lot of money. Credit card companies take a ridiculous amount of money, up to 3% as a typical credit card fee. In these days when small merchants especially have very thin margins, 3% could represent half their profit margin. So half could go to the bank. With Bitcoin, it's very low. It could be free, but in most cases it's about 0.1% to maybe as high as a 0.5% fee that is typically paid. Because it works like cash, merchants also enjoy that there's no chargebacks. If you sell a product, you get paid in cash, whether that's regular cash or fiat cash, or whether that's Bitcoin cash. Now, that doesn't mean that there's no option for a return. If there's a faulty product that you buy, well, then you're depending on the merchant's return policy, just like if you had paid for cash. So reputable merchants will, of course, honor their return policy and send you Bitcoins back if that's what the return policy says, if you had to return a defective product. The other thing is, these funds are paid immediately. Even credit cards, typically the fees don't get transferred to the merchant account for 24 to 48 hours, and not at all on weekends. Also, if a merchant starts accepting a large increase in credit card fees, banks withhold some of that for fraud protection. So none of this nonsense happens in Bitcoin. It's like cash. You get it immediately, and the funds are actually available to the merchant within about an hour. And it takes about that long to confirm the final transaction. And in many of the Bitcoin processing companies, they can auto-convert to fiat. The idea is these companies understand that merchants still have to pay their bills in dollars, so you can still accept Bitcoins without holding on to them. So you can automatically convert them to your local currency, whether that's dollars or euros or some other currency, automatically. And this can help eliminate or reduce to near zero the volatility that we've been seeing in the Bitcoin value recently. So, is Bitcoin legal? Well, the United States has said the following. The IRS, the Internal Revenue Service, declared it to be property on March 25th, 2014. That means it's property like anything else that you would have capital gains on. Stock, bonds, gold, silver, all these are property, and so is Bitcoin. The FinCEN, or the Financial Crimes Enforcement Network, provided guidance for companies that are actually doing Bitcoin exchanges, converting to and from fiat and Bitcoin about a year before that. And the Consumer Protection Agency was asked to review and issue guidelines in early 2014. So this is a new area where they will start taking a look, and either in 2014 or maybe in early 2015, there will be new consumer guidelines about how to use and accept Bitcoins safely so that the consumer is protected. In California, the big news on June 26th in 2014 is that Bitcoin gained legal currency status. So in the state of California, it can be used as dollars and various other currencies that they also approved. Basically, they approved all cryptocurrencies and virtual and digital currencies on that day. Worldwide, there's various rules and guidelines, from private money in Germany to being declared that banks should not touch it. And everywhere in between. And of course, that's not unexpected, given that it really threatens the government's ability to manage and to really have the monopoly on currency. So a lot of people say, well, if Bitcoin's really just ones and zeros, why does it have value? It's not gold, is it? It doesn't have the power of the government to support it. Well, ultimately, it's like anything of value. The willingness of parties to accept it give it value. The fact that people want to exchange it for various goods and services. Also, the Bitcoin exchanges keep this buying and selling open and a level playing field, where prices are set by supply and demand. A lot of people are getting to the point now where they're really believing the cryptography itself, the security behind that cryptography, has a huge amount of value. In other words, a value in mathematics. In fact, this coin on the screen here says vires in numeris, which is Latin for strength in numbers, which is really interesting because that's really a double entendre, meaning there's the strength in the numbers of the cryptography, but also a strength in the number of miners and the number of people using Bitcoin. Finally, there's no central authority. As we talked about earlier, this is a decentralized currency, and some people believe it's a decentralized money. The idea is that there's no central bank or government. There's also no interest rates, no stimulus, no QE, or other kinds of government currency meddling. This is a free market. Bitcoin has also spurred the growth of over 400 alternative cryptos, the 10 largest ones which are listed on the screen. Largest meaning what is the highest market cap or market capitalization of all the coins of that type. And you'll see several of them here. These cryptos are generally derivatives of Bitcoin, where they use the same concept of a blockchain and proof of work, but they may have made some modifications or improvements to the technology. An example is Litecoin, for example, has more coins than Bitcoin. About 4 times as many will be mined. They use different hash functions, as I mentioned earlier. Bitcoin uses SHA-256. Some others use different types. Other coins use faster transaction processing, as fast as every 30 seconds instead of every 10 minutes. So every 30 seconds, a new block gets added to the chain, and so on. There's many popular altcoins, which are also called, which simply means alternative to Bitcoin. And most use the coin suffix in homage to Bitcoin. Some of the popular ones are Litecoin and Dogecoin. If you are a Star Trek fan, there's Ferengi coin and Latinum coin. And then there's other special interest coins such as Cannabis coin, Karma coin. There's even Max coin that was actually named after a popular talk show host, Max Kaiser, who speaks about financial markets and is an advocate for cryptocurrencies. So, what is next for Bitcoin? Well, I hope I've made it clear or started to open your minds about Bitcoin being more than just money. It really is disintermediation. That is a disruption of many different industries, and finance is one of the key industries where we'll see that change. There's many alternative uses of the blockchain. Some of the ones that are being investigated now are how do we do initial stock offerings and share management using coins in the blockchain? How do we use escrow services and the fact of how do we implement multiple signatories for Bitcoin? You see, although I talked about a single sender and a single receiver, escrows typically require multiple signatures that banks and buyers and sellers and certain combinations all have to sign, agents as well. Bitcoin, the network itself, supports multiple signatories. Things like 2 out of these 3 people have to sign for it to be legal, for example. It can also be used for various types of ownership, whether it's property, patents, and copyrights. And the fact that it's a transparent global record that's unchangeable by individuals or even governments will create that trust in this kind of network and these kinds of new uses of the blockchain and of Bitcoin derivatives. Finally, over $200 million in venture capital has been invested in just the last few years, in 2012 through 2014. And 2014, as of this video, is still only just halfway through. These are by some luminaries in the industry, including Marc A, who is of Netscape fame, who really founded that and now has his own venture capital fund. The Winklevoss twins are Facebook fame, and the ones that supposedly came up with the idea of Facebook that Mark Zuckerberg stole or took in a different direction, and many others. So what are the risks? Talked about all the wonderful things of Bitcoin, but what are the problems, or the risks or potential risks? Well, the main one today is it's hard to use. Honestly, that's why I created the Bitcoin Tutor, to help people get involved now rather than wait until everything's in line, which might be 5 years or more. So today requires diligence, knowledge, and care, but the opportunity, of course, is very high. The adoption rate is also a risk. Will the momentum continue? Or will flaws in the Bitcoin system arise? One of the risks in the system right now is just the growing number of transactions. Can the network expand fast enough to manage all that? Networks like Visa and MasterCard have gigantic computer systems to be able to handle so many transactions per second. That's now starting to become a risk and a challenge with Bitcoin. The network is also designed to be at risk for something called a 51% attack. The pros are that a decentralized system allows no central authority, but one of the risks is that it depends on a majority agreeing to certain things that have occurred in the network. So that is, if there are 51% that decide to create fraud in the system, they can falsify the blockchain. They can falsify who's getting and receiving Bitcoins. The risk of that, though, is very, very low. As of this moment, it would take over $500 million in computer power to do that, and that's growing every day because of something called a difficulty factor, which is also a design consideration of Bitcoin. Typically, though, only the most recent blocks are susceptible, which is why it takes an hour to confirm each transaction. Usually after an hour, there's no possibility of any sort of change. And then, ultimately, there's more money to be made as a miner than trying to attack the system. The other risk is mining costs continue to increase. Right now, because of what I just mentioned, the difficulty factor, it does prevent the 51% attack, yet it does that by increasing the cost of mining, which is why it's so difficult for you and I to actually be mining on our own today. Of course, there could be possible legislation against it. Central banks don't like competition. They love that point of control that they've had for 100 years. Various governments may treat it differently, making it tricky to do international trading, knowing that if it's going to be treated as capital gains, or it's going to be treated as currency or something else. And then obviously there's tracking, taxation, and other controls that there's software being built now to make that easy to track, but the fact that those may come into place may stifle the explosive growth of Bitcoin. I thought I'd list this because there's also a risk in the way things are today. And from the desk of Dr. Ron Paul, our former congressman here in the U.S., I love this sign: "Don't steal, the government hates competition." Let me tie up this presentation and talk about why I think Bitcoin is a game changer. First of all, I believe it's the next revolution in technology and in society in general. The fact that the internet was a big change in society, Bitcoin will be as well. You see, the internet originally was created just for academics and the Department of Defense, and it was called the ARPANET, the Advanced Research Projects Agency Network. Then it was open to programmers to develop more and more websites, and it started going into technical companies and starting to expand. Now, the first industry to blossom, of course, were the tech companies. But then some of the morally suspect companies started coming out. Pornography, some of the more criminal and fraudulent types of activities, things that you couldn't easily buy in person, started happening on websites, and these, in various jurisdictions have some amount of control today. But most considered it, and this is the key, most people considered the internet as something they would never need. It was used by programmers, by the government, and it was used to do these, morally objectionable to some people industries. So most people think, why would I not just go to the mall? In hindsight, though, we all know it's revolutionized commerce and society. How we shop, how we get our information, how we interact, social media, email, on and on. I believe Bitcoin may follow, and currently is following, that same path. Really, it started in something that was really just for techies, and there were some fraudulent and criminal companies, such as Silk Road, that was well known in the early days of Bitcoin for selling things that eBay would not. And this includes drugs and various other objectionable items. Also, imagine if you had been an early investor. in one of these tech companies such as Microsoft, Apple, or Amazon? The reason why that question is significant is because investing in Bitcoin, in my mind and that of many investors, is that Bitcoin is more than just money. Part of this is like a technology IPO, like these, which is an initial public offering, which is when shares of companies first get released, like they did for Microsoft, Apple, or Amazon. Amazon being the most recent of those three, that company was seen as it's impossible to do all this stuff online. No company will be able to disrupt so many industries, books and all the other industries, ebooks and now videos and music and everything else. And Amazon proved them wrong. And finally, it's really believing that people worldwide are looking for more choices to control their own money and have a belief and a desire for something other than what they currently have in their wallet. I believe it will also coexist, although may replace some currencies around the world, and that every government-issued currency will need to respond to the benefits of Bitcoin in some way. And this will really, I believe, encourage banks to get off their seats and get up and actually make a difference online. You see, banks, I believe, have really done most of us a disservice by not creating a very secure online infrastructure. They've used old technology, bank accounts and bank account numbers, credit cards and credit card numbers, usernames and passwords as being the only security required to access your funds. In fact, many banks today have issued policy updates where any money stolen from your bank account online through a cyber attack, they are not responsible for. That's really all very unreasonable. They have plenty of money to invest, and there are technologies that can protect that fiat currency. And I can clearly say they are simply not investing. They prefer to make more money rather than secure their business. And Bitcoin will be a big impact to those companies, to traditional money. So let's take a look in closing here at a few frequently asked questions. First of all, is Bitcoin anonymous? The answer is no, it is not. It is pseudo-anonymous, sometimes called pseudonymous, which means it's not quite anonymous. Really, if you were listening a little bit earlier here, the wallet addresses identify who owns the Bitcoins, not names. So the blockchain does not store your name or my name. It stores your wallet address and my wallet address and what Bitcoins are in them. How safe is cryptography? Well, a multi-billion-dollar industry around the world is built on this. NSA, militaries of every major country in the world use cryptography. Who's in charge of Bitcoin? No one. And the other part of that answer is we all are. It really is, if you are a miner in the network, you are playing one part of the decentralized management of Bitcoin, but no one is in charge. Ultimately, what's in control of Bitcoin is the algorithm or the mathematics. And the mathematics are, in some people's mind, a pure way to manage without concern about, that the concerns that the central banks have today. Should I raise interest rates? Should I do QEs? Or should I change? Should I print more money? None of that's possible in the mathematics of Bitcoin. It's already predefined and it only works a certain way. Isn't mining expensive? Yes, it certainly is, but it's far less expensive than gold mining. Recent articles have come out that actually weigh the cost of that. Another thing that's less expensive than is the Visa and MasterCard network. It costs far less than that. If you look at everything that the Bitcoin mining network is doing, it's not just creating Bitcoins, it's managing the entire network of transactions. Where are Bitcoins stored? Well, that's an interesting question. The Bitcoins are actually managed in the blockchain, but the Bitcoins aren't really stored anywhere. The Bitcoins are no. It's really about being tracking. It's accounting. And let me say this in a different way. If you make $20,000 a year, where is that money stored? And if you answered the bank, you're incorrect. There's no money at the bank. Banks have no money. I don't know why they have vaults. They have hardly, they have a few $1,000s in cash, and that's actually even a liability to them. So it's really the whole idea that money, whether it's fiat or whether it's Bitcoins, today is just numbers online in an entry, in a ledger. So the Bitcoins themselves, that's not the key question. The real key question is who controls them. And the person who has the private keys, typically the passwords to the wallets, manage them. And that's the right answer. What will the price of Bitcoins be in a year? Well, it depends on whether you're bullish or bearish on Bitcoin. I am very bullish. I actually think it will end the year higher than it did last year. And last year, it ended the year at about $816. I expect this year will be closer to $1,500, but that's my speculation. And how do you invest safely? Well, I go through this quite a bit in my book, The Bitcoin Tutor, but the idea really is to make sure that you follow some basic practices in securing your usernames and passwords, securing your telephone if you're using two-factor authentication, and if any of those are compromised, to quickly make the changes in your wallet to secure them. So, as I mentioned earlier, I recently published the Bitcoin Tutor book, and it just came out in the end of May 2014, and it has 7 key chapters, and it goes into each of these areas in much more detail about what is money really, and really more about what is Bitcoin, so you can understand more of the ins and outs. The most important parts of the book, in my view, is really how do you get started with it, how do you trade them safely, how do you use them, and then understanding more about the alternative cryptos and really what's next for Bitcoin in much more detail than I can do in just an hour presentation today. In addition, it's the only book on the market on Bitcoin that has a full glossary that defines all the major terms in the Bitcoin network, 20 diagrams to further explain how do you actually do all this trading and how do you buy and sell and all this stuff and secure your Bitcoins, and then a full 8-page index with every key term in the book. So you can use this book as a reference as you're learning and becoming an expert in Bitcoin. I also created the Bitcoin Tutor website, which is a great place to go with some basic how-to videos, some news and commentary that I add to express and explain what I think the news on Bitcoin really means. What also is coming is additional learning tools. We've gotten a lot of interest about how do you really invest with Bitcoin, how do merchants really use Bitcoin, and so on. And we're going to be creating some additional learning programs to help people really get started and be on the front end or front edge of Bitcoin. So to learn more, I recommend you get the book. It's available on Amazon in paperback and Kindle formats. Visit the website and sign up for free weekly updates. All it takes is your name and email. We don't spam. We send out weekly information that most of our readers find very valuable. You can also connect on social, on Twitter, Facebook, or YouTube at the Bitcoin Tutor. And finally, the Bitcoin Tutor's mission really is really dedicated to assisting people to learn about, use, and profit from Bitcoin, the future of money. Thank you for your time today, and remember, keep learning about Bitcoin and profit from the knowledge.